All right, folks. Thanks for coming. Thanks for braving the rain. We're going to get started. Happy New Year, by the way. What year is it? It's the year of the dog for you dog people, so it's your year. So my name is Rob. I organize Idea to IPO. We've been doing events in Silicon Valley for many years. We hold events multiple times a week from San Jose to San Francisco. I'd like to highlight two events that are coming up. Next Wednesday, the 24th, how to build a successful startup with little or no money at Google Launchpad up in San Francisco. Who here has little or no money? Okay, well, anyway, this event's for you guys, so check that out. Thursday the 25th, how to prepare your startup for venture capital funding. That's also up in San Francisco. So check out the details for those events and all of our events on our website, ideatoipo.com. We were launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 55,000 members among all our meetup groups in the Bay Area. We've completed over 1,841 events. We're the most active, most prolific startup event organization in Silicon Valley, bar none. I was waiting for that crescendo to build up a little more, but that's okay, yeah. Anyway, I appreciate the enthusiasm. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. So to that end, we provide content that's practical, actionable, and relevant, stuff that you can actually use to succeed as entrepreneurs. And we believe in building community, because Silicon Valley is an aspirational ecosystem. It attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley? Cool. Who here was born and raised in Silicon Valley? Wow, welcome. Anyway, so whether you were born and raised in Silicon Valley or just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. So in addition to our content-oriented events throughout the week, we have some fun social events. So every few Fridays, we have a TGIF mixer, that's thank God it's Friday, at the Hyatt Regency Santa Clara, 8 p.m. to 11 p.m. So the next one happens to be this Friday, the 19th. So you're all invited to attend. I know you guys have plans on Friday nights, but just in case, we have an option for you, so check that out. With regard to value, it's important that we provide value at each and every one of our events. Not just value for your money, which is important because we know many entrepreneurs are struggling financially, so we make sure that our events are affordable, and if you cannot afford the cover charge for whatever reason, come see me and we can work something out. And at every event, we make sure that we have a decent buffet meal. Is this a decent buffet meal? All right, 5 people like it, that's okay. Well, I want to thank Royce Law Firm for sponsoring that decent buffet meal. So let's hear it for Royce Law Firm. Someone had to go to Costco, Subway, and Taco Bell to pick it up. That was me, though. So, in any case, with regard to value, more importantly, we want to make sure that we provide value for your time at each and every one of our events, because time is your most valuable resource. Is anyone here getting any younger? Besides our moderator? In any case, at each and every one of our events, we want to make sure that you maximize your ROI for your time. We have many partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, lots of other players in Silicon Valley. Tonight, we're grateful to the College of San Mateo and the Small Business Development Center for hosting us at this beautiful venue. Is this a beautiful venue? Yeah. Well, we've held many, many events here, and we look forward to many, many more. And I'd like to have Jerry from the Small Business Development Center and the College of San Mateo come up and say a few words.
Thank you, Rob. So I'm Jerry Barignano. I'm with the Small Business Development Center, but I'm not actually located here. My colleague here, Robert, is upstairs, so do come here, meet with him. I run something called the Tech Futures Group. Our organization supports all the small business development centers in Northern California and pretty much in most of California. And what we focus on are tech companies. We're a nonprofit, We provide free business advice to tech companies. Our services are free. We don't take equity, and we don't accept cash. We're funded by the Small Business Administration and also some funds from the state of California. So the way it works is you would apply as a tech company to Tech Futures Group, applications online, and of course it's free. And if we like what we see, we pair you with an entrepreneur in residence. Serial entrepreneurs had a good exit or two, and they provide strategic business advice for you, and then bring in specialty advisors if you need them. Patent attorneys, someone who helps build a financial model so you understand your business better, and also so you're prepared to pitch to VCs or angel groups. We do help with pitches as well. And then we also have someone who does SBIR grants, government grants. We've been extremely successful with government grants. Roughly 1 out of every 2 of our clients who have applied to a government grant has gotten granted. So those are wonderful. These are non-equity grants. My associate director is Edgar Sharon, who's here, and we've got a little table here. Come and visit us afterwards, or take a look at our website, techfuturesgroup.org. Thanks.
A couple of our other partners are here tonight. I'd also like to have them come up and say a few words. Let's hear it for Cesar Plata and everycircle.com.
Thank you. Appreciate it. Thank you, Rob, and welcome, everybody. I'm Cesar Plata, the founder of everycircle.com. We basically connect circles. We've been in business over 19 years, but finally we've built an online platform that not only will help you network, it will generate leads for you, and we will also share revenues. Help us help you grow your business. This we truly believe will be the next big thing, the next big online platform. Every circle connecting circles of influence. Thank you.
All right, next up we have Kay from the Silicon Valley Innovation Center.
Thank you, Rob. So my name is Kay Najimov. I'm from Silicon Valley Innovation Center, and our job is to connect people and companies outside of Silicon Valley with Silicon Valley ecosystem. And we also do customer engagement programs. So if you guys have any important clients in town, we can do innovation training program for them, or just innovation tours. My business card will be over there, so if you would like to talk about it, come and see me. Thank you.
All right, so though our local mission is to help entrepreneurs here in Silicon Valley, our greater mission is to democratize entrepreneurship and innovation all around the world. To that end, we have a robust YouTube channel, youtube.com/idea-to-IPO. Check it out. We have tons of videos. We've documented and archived many of our events. And this rich, valuable content is available on demand, anytime, anywhere, totally free of charge. Whether you're in San Mateo, Palo Alto, Maui, Moscow, or Timbuktu. Our partner in this endeavor is Tim Jeggers of Jeggers Films, one of the top professional videographers in Silicon Valley. Let's hear it for Tim.
Thank you, everybody. So I'm Tim. I'm shooting the video tonight. Event videography is kind of my specialty, and I take it home, edit it. I also do testimonial videos, product demos. Got my start with weddings and all sorts of other things that I won't bore you with. Just wanted to introduce myself and to let you know that the video will be up on the YouTube channel in about a week or two. So make sure to follow the youtube.com/idea-to-IPO at some point, and then you can check out all the content that Rob also mentioned. And yeah, that's pretty much all I've got to say, so I'll pass it back to Rob. Thank you.
All right. Just to clarify one thing about the parking. The regular college parking regulations aren't enforced today, so don't worry about the parking. If you did get a parking ticket for whatever reason, go see Jerry and he'll take care of it. Yeah. In any case, come see me and we'll get that cleared away, but you shouldn't have a parking ticket on your windshield tonight. So we'll get started with our formal program. Here's the schedule for the rest of the evening. Our panel is going to have a spirited discussion till about 8 o'clock. So audience members, hold your questions until 8 o'clock. At that point, we're going to set up a mic stand here. So we're going to be really efficient about it. Go up to the mic stand, ask your question. We want to take as many questions as possible. 8:30, we're going to wrap it up, and there'll be some informal networking. And In the meantime, if you need to get up and get more food, use the restrooms, go ahead. It's a real informal situation here tonight. So without further ado, I'm going to pass it off to our distinguished moderator. He's one of the top corporate attorneys in Silicon Valley. Actually, he's an iconic figure in Silicon Valley. He's everywhere. He's at meetups, conferences, social events. He's everywhere. He's Roger Royce.
Thanks, Rob. Good evening. Thanks for coming out. I'm Roger Royce. I'm the founder of the Royce Law Firm. We're a business, corporate, and tax firm with offices in Silicon Valley, Silicon Beach, that's Southern California, for those of you who live up here, and San Francisco. And as of about a week ago, we're now in China. We have an office, 2 offices, in fact, Beijing and Shanghai. So before I get started, just a couple of announcements. I want to let you know that I'm here moderating this today because we are doing quite a bit of work in this space. I'd say we see a new ICO about 1 a day. We don't take all of them, but I see a new one at least every day. This is a really big thing for us. It's a big thing for everything. If you get a chance, you should stop over and stop by our table, say hello to Alan, and pick up a card. I believe he's even got some brochures. We'll tell you a little bit more about us. We work with technology startups. We take great ideas, we turn them into great companies, or we help you do that. Tonight's topic, it's really interesting. So the other day I was sitting in my office and preparing for this talk, no doubt, or this panel. And my 12-year-old daughter come walking into my office like she does every day after school, and she says, "What is the price of Bitcoin today?" And I said, "I don't know, leave me alone, get out of here, I'm busy." She got in her Ferrari and drove off, because California kid, you know. But I'm not making that up about little kids asking about the price of Bitcoin. Everybody knows about this. Everybody's talking about it. In fact, if you go out to a bar in this valley and sit down and have a drink, you'll overhear people talking about it. It is a really big thing. It's just everywhere. It's probably one of the biggest things that is, I think, the biggest thing that has hit the valley since, well, things that you probably don't remember that we were talking about earlier, but I'll allude to, maybe since the Dutch tulip market, I don't know. So the interesting thing about it, though, is I see a lot of this stuff, and we're covering a really broad topic tonight. Bitcoin, cryptocurrency, blockchain, ICOs, and I think we want to move that down the abstraction scale a little bit. And the thing about this is that I think the understanding level varies greatly among people in this. There are some of you in this audience that are very technical. You can tell me all about smart contracts, right here in front. Some of you might be new to the area and just interested in knowing what it's about. So before we start, I do want to take the temperature here and get an idea, especially for our panel, just who we're talking to. So how many of you actually have a blockchain or crypto company, maybe a crypto startup? How many of you would consider yourself very technical, on the technical side, the software, the coding? Okay? Non-blockchain startup entrepreneurs. Investors. Okay, for you startups, I found the investor. He's sitting right here. Okay? For crypto projects. And there's a few more in there. Service providers like me, a few of us, okay. Anybody else? Journalists, media, anybody I missed here? Okay, just enthusiasts, you know, who are just here, okay. And how many of you, last question, how many of you would say that your knowledge level in this area is fairly basic and you could learn a little bit more here tonight as opposed to advanced? Okay, tells us a lot. So what we're going to do, I'm going to introduce our panel. We've got a great panel because it's very diverse. Our panel is not just all of one thing. We've got a couple of investors, some VCs. We've got a lawyer on the panel who does ICOs. We've got an accountant that works on ICOs and other blockchain type tax and regulatory issues. So I'm going to give you a brief introduction, and I'm going to turn it over to you to talk more about who we have. Mark Lim, on my immediate left, he's managing director at Anderson Tax in San Francisco. Next to him is Paul Brown, the founder of, can't read that, is that Yex Ventures? Jennifer Hahn, she's an attorney at the Royce law firm, and John Solberg, who is a partner and managing partner at Expansive Ventures. So before we get started, I'd like to give each of you panelists just a few minutes to talk about who you are, why you're here, how you come to the space, and any points you want to get across before I start asking questions. So why don't we start with you, Mark?
Sure, happy to. So thanks everybody for coming and allowing me to kind of maybe just say a few thoughts. You know, as Roger said, I'm the tax guy on the panel. I've been doing kind of tax advisory work for probably almost 20 years now. We call him managing director, but I'm a partner with Anderson Tax. You know, Anderson Tax is we do basically a full-scale tax services, everything from individual through to, you know, corporate to investment funds. So, you know, you name it, we do it. You know, I spent most of my career here in the Silicon Valley and also spent a chunk of time based out in Asia doing a lot of tax advisory work for business entities. So for investment funds, private equity, a lot of M&A, and I've also done work for just regular, you know, general types of corporates. Over the last year, I've gotten fairly involved in the ICO, you know, kind of structuring. And, you know, tax is one thing that if you're going into business, whether it's, you know, you need capital. And if you look at ICO as a way to raise capital, and a fairly pioneering way to raise capital, there's a lot of tax issues surrounding, you know, how do you do it? And I think, you know, hopefully I'll be able to say a few words tonight that will, you know, so you guys can leave with something that you didn't know. So thank you very much.
Yeah, hi, I'm Paul Brown. I'm previously a software engineer turned entrepreneur. I've been running startups for about 15 years. The last 7 years I've been building a few FinTech businesses. I've had a few exits. I've built and still am involved in one of the largest payment processors in Southern Africa. And now I'm an investor, which I think is just a way of saying I'm an entrepreneur who hasn't figured out my next startup. I got into Bitcoin blockchain because coming from Southern Africa, lots of African countries have capital flight controls. The payment corridors in Africa are expensive. As a result of that, it's very difficult to move money around. So I got into Bitcoin a few years ago and have been sort of working with the tech. And now there's very few things that I don't do. I do it all. I trade it. I invest in businesses that are ICOing, that are not ICOing, ICOs. And I also advise a few blockchain startups, and also startups who are looking to do an ICO themselves.
Hello, can you hear me? Yes, you can hear me. There we go. My name is Jennifer Hahn. I am an attorney with Royce Law Firm, and I deal primarily with all of our ICO clients at whatever stage they come in. If there is a domestic offering, foreign offering, assisting them with reviewing their white papers, intercompany agreements, setting up their businesses, basically A to Z, everything that there is. And how I got into this, Roger told me to get into it because he's my boss. No, I'm actually just joking. It's an unregulated area. It's very interesting what you can and cannot do with the lack of regulation in the area, and I was interested in the lack of regulation, trying to properly advise our clients and to mitigate future and current risks.
And last and maybe least, John Solberg. I'm a venture capitalist. I've been doing fintech investing for close to a decade now. So I've paid attention to the kind of evolution of blockchain and Bitcoin and been watching it. And I've done a little bit of investing in it as well. And it's also interesting on the fund side for me in terms of people raising funds and how that impacts venture.
All right, thank you very much. So we got this big long list of questions that we prepared in advance and we rehearsed, and I said, you know, I might depart from that a little bit. I'm going to depart from that list of questions right from the start because it just occurred to me something, and this one is for you, Paul. I want to take a big step back and kind of talk about what is it that we're talking about. What is this blockchain stuff? What's a smart contract? And I got to set this up. I was out at the Modernist in San Francisco the other night having a drink, and we were talking about, guess what, blockchain. It's all people talk about in San Francisco. And a software engineer was telling me that this is not that big a deal. This is just a ledger, just happens to be distributed. Not only that, the technology is not even that good yet. It uses a lot of energy, it's pretty slow. You know, this is not that revolutionary. You're a software guy. Tell me, what is it, and is it a big deal?
Well, I was a software guy in a previous life, so there's my disclaimer. Look, I think this is where we'll probably end up in some semi-religious arguments with maximalists and not. What the blockchain is, it's a form. It allows for it allows you to trust somebody that you don't know digitally, and it does that at scale. And it simply does that because it's figured out a way of distributing that level of trust. So rather than one person being the custodian of the information of who owns what, everybody's the custodian of who owns what. That allows for a total decentralization of trust. So there's no singular party that you need to trust. It starts getting much more complicated very quickly from that. Whether or not the technology is there yet, what's it useful for? I think maybe if I could just take a step back, I think the application of the technology at the moment, when designing a FinTech solution, there's essentially three components that you need to consider. There is the technology itself of moving money from point A to B, but there's also getting the money into the system and getting the money out of the system. Those are three vital components in any FinTech that I've come across, any FinTech business. And Bitcoin is the rails, and because of the adoption and because of the people that have used it, obviously exchanges have come online, and the price of Bitcoin is absolutely, well, is if causally or functionally related to the number of avenues in and out of Bitcoin. So what I mean is it's easier to get money in and it's easier to get money out, and Bitcoin is the rails. Whether or not that solves a function in and of itself, that remains to be seen. I would say, just to head off a potential question or concern, is a lot of people wonder, what is Bitcoin actually useful for? It's a good question. I would argue that there's a functional use for it in the fact that if you consider the banking industry as it is today, there is a $20 trillion business of banks, tax firms, all the service firms around that. It's a $20 trillion business focusing on getting wealthy people to distribute their capital across the world. Why? It's because that they want to set them up in different jurisdictions. Fine. Bitcoin solves that. Bitcoin can do that. It is border agnostic. So that is an immediate use for Bitcoin. The further question is the store of value and what have you, and we can unpack that further. But I don't know. That's the 3-hour answer compressed into maybe 5 minutes.
Oh, okay. All right, I'll take that. Say, John, it's great to have a VC on the panel that will actually invest in this, because a lot of the VCs I talk to, they seem pretty hostile to not so much blockchain, but to crypto. And I'm wondering, in the way I've heard it expressed, is that UVCs have been disrupting industries your whole career, and now comes along a technology that's going to disrupt the venture capital industry. And it's just like my industry, by the way, for that matter, because of this blockchain technology. Do you see it that way? Are you hostile to it, or do you see this as a great opportunity?
I'm not, well, as you said, I'm not hostile to it. I actually think, well, there's a few things I would say in the VC world. So there are a lot of people who I think who are sitting on the sidelines to wait and see what it looks like. I think there's some that are hostile. I have friends who put large chunks of their fund into Bitcoin 5 years ago, and that's actually the largest and most profitable piece of their fund. So there are people who have actually been really early and very successful, actually just being part of it from the beginning. But I think when you take a step back and think about what blockchain can do for the venture capital industry, I think it's actually a step in the right direction. So there's venture capital is, at the end of the day, if I'm good at my job, I'm making money for my investors because I'm able to either select better than someone else, or I'm able to help that company more than someone else, or hopefully it's a combination of both. So the value is there. That's where the value should be. But a lot of times it's actually that it's very hard to raise a venture capital fund. It's not a simple thing, just like it's not a simple thing to raise money as an entrepreneur. So there's not a ton of capital in the grand scheme of things that goes into venture. So it's a scarce commodity, and when you look at it as on a global, on a global scale. In this case, you actually make it more ubiquitously available to people. But even more interesting is if you think about it in terms of fund structures and the way you might be able to use this, because it's actually tradable. So funds are typically 10 years. And they're very illiquid. This actually has the ability to potentially make funds liquid. It really changes the way you think about venture in a lot of ways, and it could actually make it a way more interesting asset class. So I'm kind of excited to see where it goes.
So I'm going to ask you about ICOs next, but first, Jennifer, so we're all on the same page, can you describe what an ICO is, or a token offering?
So the initial coin offering is the actual
Closer to your mouth.
token generation event. There are different models in which people will structure their initial coin offerings. Some individuals will do either SAF, Simple Agreement for Future Tokens, up until the actual token generation date, but that is, in essence, a launch of your tokens, whether or not they are actually a security related to underlying equity investment or assets, or if they are actually a utility. They have some consumptive use. There's a wide array of definitions that you'll find out there regarding ICOs, and people tend to get confused. But again, just with the ICO, that in of itself is just the token launching event. Whether or not you actually have a platform up, or there is, rights associated with a token, those can be discussed in different areas. But yes, the ICO is just that actual token launching for your platform or underlying business venture.
Okay, to summarize, so an ICO, it's a launch of a token, and you said there's two kinds. One is this token, this digital asset that allows you to gain some sort of utility, allows you to use a service or get a product. The other kind is a security, I think I heard you say. So Mark, you do a lot of work in this area. I know your firm does. Can you expand a little bit on what the difference is between them, especially the tax difference, because I think it's significant.
So this is okay. So let me put, if you looked at the last 5 years and you'd say, okay, ICOs now, maybe before that, you had Kickstarter campaigns, you had GoFundMe campaigns. You're out there, you're sitting out there. You got a product that you want to develop, you've got a business you want to run. You need capital, right? So what's the traditional way of doing that, right? The traditional way would be is you set up a company. You go get investors in your company, you issue shares out of a company like equity, or perhaps you go to a bank. You go take out a loan from a bank, and you'd say, okay, those traditional ways, both from a regulatory and from a tax perspective, those are pretty, well known, and people know if you take out a loan, what does that mean from a regulatory perspective? If you take out, if you invest and have shares in a company and you sell stock in Microsoft, you kind of know how you're going to get taxed, right? And those are the traditional ways to get capital to run a business and to develop a business, So now you say, well, there's a lot of reasons. There's a lot of regulation, a lot of times with those types of ways of finding capital. And regulation is a lot of cost and time, and you don't want to wait. You want to get your product out in the market quicker. So in one way you can think about as security tokens and utility tokens are two different ways to basically sort of fund your business operations. Securities tokens being a little bit more closer to say, I'm going to be an owner in a company, because a security token a lot of times gives you an ability, almost like a profits interest or like a right to share in the underlying profits under certain circumstances. And a utility token is sort of saying, well, you know what? I'm going to develop this new technology, but I need some money to do it, so I'm going to issue a token, and that token has certain rights. Maybe it has rights ultimately when the technology is developed to utilize that technology in a certain way. But it's a way to be able to get money in, and at least as of right now, and I'm sure Jennifer and, and Roger would be able to expound a lot more than I can, but from a regulatory perspective, there's not a lot of rules around that. And so for a lot of entrepreneurs, it's really kind of a very intriguing, exciting method to fund what you want to do in business.
But the great thing about selling stock, like we did the old days, is I didn't have to pay any tax on the proceeds of a sale of stock. If I get taxed on the proceeds from a token offering?
So that's a great question, right? Because
Thank
you'd
you.
say, on one hand, it's a bit greenfield from a regulatory standpoint. Now, from a tax standpoint as well, it's also a bit greenfield, except that there's one the IRS came out in 2014, and they said, well, we don't know, but we know something called Bitcoin. And we look at Bitcoin and we say, well, Bitcoin, you can trade this. We're not prepared to say it's a currency. We're not prepared to say that it's like a dollar or like a euro. But we do think it's property. And because you can trade property, we're going to treat it as if it's property. So, if I get property, that to me, from a tax perspective, I've gotten something of value. Well, that's taxable, right? So, for example, if I'm an investor and I invest and own a share of a company, purely putting money into a company and getting back stock, that's not taxable. If I lend money, right, I'm a bank, I lend money, I'm a hedge fund, I lend money, the act of lending money itself is not taxable. But because the IRS views Bitcoin and, as property, and to a certain extent, because that's really the only guidance, ICOs a lot of times tokens may fall under that guidance. Kind of the prevailing view right now is, okay, well, if I go into an ICO, I issue tokens, I get back some type of property. A lot of times tokens are issued for other types of cryptocurrencies, Ether or other things. That's taxable. And so yes, when you issue it to an ICO, a lot of times that initial offering is a taxable event.
Jennifer, anything to add to that?
Yes, so the IRS notice Mark was referencing basically describes convertible virtual currencies, and those are, well, to date, the IRS hasn't promulgated any rulings or guidance as to what applies to virtual currencies. Virtual currencies, in essence, Farmville on Facebook, buying tokens, that's a virtual currency. What a lot of these ICO companies are creating, depending on how they characterize and depending on how they use them, are not convertible virtual currencies. They're not Bitcoin, they're not Ether. You cannot go to an exchange and give them your tokens in this ICO and get US dollars back. That meaning that as of now, I agree with Mark, the only guidance the IRS has issued to date is that with respect to readily tradable virtual currencies that are readily acceptable in all markets are property and should be taxed accordingly, where the gray area falls into play. What are virtual currencies? How are they utilized on the platform? Again, as Mark stated, they can be a security, they can be utility, but let's say you are raising funds for your ICO, which will have a consumptive use, an actual provable consumptive use, they are a utility, but up until that point, to raise them, you're using a SAFT, basically a form of security to raise funds for the later issuance of tokens. That's where you want to call someone like Mark and describe your situation to them and actually determine at what point are you going to get taxed. You have to pay tax. Is there a way to mitigate that, not only for yourself as a company, but it's prudent to do it if you actually want a successful ICO to determine all these issues in order to properly convey this information to your potential investors also.
Okay, back to my investors then. Now, having heard this sounds like a really good alternative to the old-fashioned way of raising money. It sounds like if we're careful, we can avoid the tax problem. And I read the papers. I see that there's big money being made in this place. So again, John, is this something that's going to disrupt your industry? Are people going to start doing token offerings and they don't need VC money anymore? What do you think?
In some cases, yes. I think there will be some people that will take money from and in an ICO, and they'll bypass VCs just like some people do crowdfunding and they bypass other mechanisms. So I do think that there will be some that will do that. I think though that over time what you're going to find is that after the hype dies down, then people are going to have to determine whether these are high quality offerings or they're not high quality offerings. And so then you start looking at what are the signals that tell the layperson whether or not this is a high quality company. And one of those might be a strong VC investor, might be selection on the same criteria that VCs typically invest in startups, looking at the technology, looking at the team, looking at the market. So I think that there will be some that will go in different directions, but at the end of the day, what part of what VCs do, if you think about the companies that have really scaled to become big over time, they've almost all gone through VC capital. Whether that is because the VCs have some magical powers, I would say no, but I think that they are pretty strong in terms of being able to help companies and be able to identify talent.
So you bring something more than just cash to the deal, I think is what I'm hearing you say.
I sure hope so.
Yeah, maybe if I can also add, or just add a different perspective on that, is the other thing to bear in mind is under the custodianship of venture capitalists and angel investors, the startup failure rate is 90% apparently. So left unchecked, people to their own devices, I can't imagine that stat is going to improve. However, the counter to this, which I'm mindful of, and I think a lot of investors are mindful of, is if you have a look, there is one of the exchanges is called Binance. It is the fastest profitable unicorn in existence. I believe it was something like 6 months it took to get to $1 billion valuation, and it's profitable. And it didn't raise venture capital as we understand it. I think it was purely an ICO and public funds. So I think more and more of things like that will happen. I understand that it's an unusually enthusiastic market at this point in time, but I think the more things stay the same, the more they'll change, and the more and they'll continue to look familiar.
Just maybe to add one thing, right? I mean, I think we talk about ICOs, and maybe if the one takeaway is that the ICO today is not the ICO yesterday, and it will not be the ICO of tomorrow. Just give you like a really quick, so I was working with one ICO client, I think we started working back last October, and they originally started, they were gonna do a domestic ICO raise. So we got to talking to them and gave them a little bit of options, and then they decided they were going to do a Cayman-based ICO raise. Started talking about the tax issues on that. They got a little bit uncomfortable, so they said we want to do an ICO in Switzerland. So then we went out and we engaged with Swiss Counsel, and in the course of 3 weeks engaging with Swiss Counsel first started off saying, oh, this isn't, Swiss regulators haven't said anything, so it's not regulated, so we're going to do A. And literally, like 2 weeks into it, the Swiss regulators came out and expressed significant concern. And that put a damper on doing a Swiss-based. And I think about a week after that, China came out and banned ICOs, right? And then Korea has since come out and banned ICOs. So I think this is an area whereby there is a lot of regulatory change flux. Tax, governments, everybody's trying to understand what is an ICO. And so I think the takeaway is it's going to look different tomorrow than it looks today.
Are these regulated? And this will be the last I'll ask about ICOs, but how are they regulated? Either you or Jennifer are they securities?
It depends, the best answer that we can give. Generally, if you are taking money and not simultaneously giving them a product, it's likely a security. To date, there are no regulations. There are statements from the SEC's chairman as to his point of view, and I'm sure his department, that he has not seen an ICO to date that is not a securities, but there are no rules promulgated. To be safe, all these ICOs generally are doing them as securities exempt offerings, 506C generally, investment from accredited investors, no unaccredited. So yes, simple answer, there is no clear answer, but to be on the safe side, we will likely see regulation at some point, whether or not it stems from the individuals in the actual business and individuals that deal with cryptocurrency. I wouldn't be surprised that you get a push from actual consumers and investors first, that they are going to shy away from certain ICOs that to them pose a regulatory risk. And then hopefully the other regulatory agencies will jump on the bandwagon. It's very difficult not having regulation, but because there isn't, you get a lot of bad apples in the market where individuals, unaccredited investors, Aunt Sally, Uncle Bob, who don't make very much, are getting caught up on these 2-page white papers that make very sweeping, I can give you an X amount on your return, and they lose everything. So yes, to date, they're not currently regulated, but I am sure that they will be. And from my own personal account, I hope they will be at some point.
If I can just throw in there, regulations, I think we're probably a couple of years away from where the tech is at a point where regulations just simply don't matter. Regulation in this country, it was regulated towards the beginning of the 1900s that alcohol was not to be sold. The regulations were in place. It did not succeed. Having a regulation does not make a reality. And for better or worse, the technology that we have at this point in time that's on the cards, there doesn't need to be a centralized exchange. So we're currently living in the Napster era. We can shut Napster down if we want. Pirate Bay, there are regulations against Pirate Bay. It's bulletproof. So we're heading into a world where the regulations will exist and can absolutely be ignored. And there's two sides to that. So BitConnect has been a Ponzi scheme. I hope none of you got caught in that. A lot of people lost a lot of money. And that's where regulations are good. But there's another side to it that makes me ask, well, why should anybody tell me what to do with my money? You're telling me I can go to the army and fight for my country, but I'm not qualified to make a decision what to do with my money. So there's two sides to this. Just having the regulations does not make the tech go away. So the bell has been rung. The genie is out of the bottle. Regulations are coming. What I'm curious to see is whether or not they'll amount to anything or enough.
But Paul, currently, how do I keep, how does my 12-year-old daughter keep from putting my money into BitConnect? How do you sort these out? I mean, how do you know? I've heard this rumor that these things are kind of risky and that, that there have been some frauds out there. So how do we avoid them and pick the good ones?
I think you see which ones the VCs have invested in.
Well, yeah, I want to come back to that because you guys got a diligence process, and with no regulation, anybody in this room can go online and buy this stuff, right? What's a good diligence process?
I think the question is, how do you stop your 12-year-old raiding your liquor cabinet? Your mileage may vary. I'm cautious not to put a pro or a con against this. What I'm trying to get across here is that this is now a fabric of our existence. And thinking that regulations and the government is going to come along and make it all better, I think that's naive. The tech does not care.
Any other comments? John, you look like you want to say something.
I think that there's some truth to that. I don't know what that means. If you listen to Tim Draper talk, he'll tell you that, at some point people are just going to be able to live anywhere in the world and move everything that they want, and it'll all be very, very transparent. And it's essentially, I have these assets. I'm bringing them with me to whatever country, whatever regulatory regime you want to be in. Yeah. I think you're gonna see a lot of resistance from governments, but I don't know what that looks like from here.
You familiar with the New York State regulatory regime of Bitcoin? Did you follow that? They basically kind of shut down a lot of the industry there. All right. Well, let's move on. Let's talk a little. I want to shift gears. We could talk about ICOs all night, but this is a broad topic. I want to talk a little bit about blockchain. And again, especially for the investors on the panel, we got a good description of what blockchain technology is. Let's talk about some of the applications and some of the things you might invest in that are blockchain powered. So for example, the smart contract thing. At first, it sounds like a machine is going to replace me. and drafting contracts and making them enforceable. Is that what a smart contract is? Can you give me an example, and maybe a real life example where a smart contract technology has really moved the ball and created something new and innovative?
Yeah, I think we're still short on examples in terms of anything that's moving, fundamentally changing things. I think the closest is probably the concept of an ICO has really been unlocked by Ethereum smart contracts. In terms of replacing your job, I can't foresee it, but you know, the contracts are algorithmic. It does make sense. I think I don't think you're going to be out of a job just yet. I think. Moving forward, you may find as smart devices become connected, there may be, you know, if I've got a smart car and I'm driving in traffic and there's a smart car in front of me, the car could automatically exchange some sort of information, and a monetary exchange could be, you know, a microtransaction could take place where that car gets out of the way from me. What a pleasure. I mean, I don't know. The point being is, you know, this is 1995 and we're trying to figure out what Uber's going to look like.
Yeah.
I actually do have a real world example. One of the investments I made is in a company that does lending around the world. It's called ETHLend, and it actually allows you to put up assets against what you're borrowing, and that contract is enforceable then. So the assets are actually then delivered if you don't perform on the loan, and both sides of that transaction are managed by their technology. So that's an example, I think, of, you were talking about money in and money out. So this is a real world example of a company doing that and using a smart contract. As far as taking over legal, I think we could have a panel on AI if we want to talk about that.
Yeah, we do that one. No, that's a great example. Just the whole, again, financial industry and getting rid of Western Union charges when money transfers hands, because you get the middleman out of the middle of it, right? You know, the other ones I've seen some smart contract technology in food traceability. So you can certify a product as organic and then follow it all the way through the system, so the consumer, you know, if it somehow loses that certification, it doesn't end up in a store. So those are a couple of good examples. But let me, without talking specifically, because we got a lot of entrepreneurs here, many of who are working on stuff like this. What are you going to look for in the future? What do you think is, what's a really promising opportunity for blockchain technologies and applications? And maybe if it's not a specific industry, like the lending one, that seems kind of obvious. I wish I had thought of that. It seems so simple now. What's the next thing that I'm going to say a year from now, I wish I'd thought of that, and John's invested in it already? Any predictions?
I think we're already seeing quite a few. I don't know whether, I haven't paid enough attention to the details of each company, but I think if you look at places today where contracts are a big part of the industry, so real estate, for example, is prime for this. I think FinTech clearly is one. I think we will probably see some biomedical type of applications. I saw a really fascinating one that it's probably one of the favorite ones I've seen. It's out of Germany, and they're allowing you to put your personal information into the cloud and sell it as an advertising revenue stream. So they want to essentially take away Google's money.
Wow.
I also think the privacy coins. I mean, this is probably speaking to products that are already there. Privacy relating to obfuscating financial transactions. That's going to be an interesting one. I think there's an application for that. I'm also not convinced at this point that a blockchain, if it should be more than just a distributed. If a centralized database can do it, you don't need to do it on blockchain. So that leads to thinking, okay, well, what are things that can be used in a distributed, from a platform in a distributed way? And what I'm really interested essentially is and I've seen a couple of proposals of essentially a a layer running on top of TCP IP that is completely obfuscates all traffic of any kind. So a fully private browsing experience that is, and then your miners, your nodes actually connect and help make this network secured and keep it private. So think of it as a ultra secure, ultra private browsing experience or internet experience, which is for a variety of reasons quite technically difficult to use with existing infrastructure. And there's a couple of interesting projects in the work there.
Okay, I want to spend a few minutes on crypto, since it's in our title, and talk a little bit about what's going on in cryptocurrency. So I bought Bitcoin quite a long time ago for $500 a coin. I watched it go up to $19,000. I felt like the smartest guy in the world, and I hung on to it, and it went down to, what, $9,500 the other day, and I felt like the dumbest guy in the world. I don't know if I got the stomach for this, but first of all, I have a series of questions on this. Number one, is this really a currency? Can you call it a currency when it fluctuates by 50% in a few hours? And will it ever become a currency, or is it something else, like a commodity? Anybody want to address that?
I think one of the problems is it's referred to as a currency. I don't know if it is a currency. It's referred to as a store of value. I think it's easy to think of something as a store of value when you're on a 2.5-year mega bull run. When you're in a bear channel and everything is going down, I don't think anyone's going to consider it a store of value. I think for what it's worth, and if I'm wrong, you can come back to me for a full refund. That's a joke. I think maybe a lot of people are looking at the price right now. I think it's very healthy that we've come back down from a ridiculous and unsustainable growth. I think this is all healthy. I suspect we'll probably hover around these levels for a little bit, and the party's going to be back on in the next few months. Before the party will be finally over at some unknown point, because I think ultimately this is a little unsustainable. But if people are a little worried now, hodl.
Mark, are you taking crypto and payment of your fees yet? Any Bitcoin? Can I pay you in Bitcoin?
No. No, I mean, yeah, do I? Well, for the exact reason that Friday, if you looked at the price of Bitcoin, and then yesterday and today, it's yo-yoing. Yeah, I mean, I think that Jennifer really hit to me. Currency has to have an ability to monetize it, and when you have so much volatility, there's not a lot of trust, and when you don't have really a lot of trust, I think is why is a dollar? Why is the yen? Why are the euro? Why are they currencies? Because there's a lot of trust that a dollar's worth a dollar, type of thing. And so until I think the market develops enough that you look at it almost like a commodity, I think that it's going to be difficult to consider cryptocurrency as true currencies.
Okay.
I think what I would say is to me the best analogy is still the commodity as opposed to the currency, but I do think the long-term trend is probably pretty strong. If you think about the way people are behaving now, and if you also go look at countries that haven't always had a stable currency, these swings, recently have been really dramatic, but in some places around the world you see hyperinflation and you see things where their currency doesn't hold value as it is today. So this is actually a very stable store of value in the grand scheme of things. Where I think we're still not there is the technology's not there. The price isn't even consistent through different, there's arbitrage opportunities as we speak right now because the price is different on different exchanges. So I think part of this is just maturity and liquidity in the market that will actually smooth out some of these and we won't see quite as big a wild swings.
Yeah, I know. I also think there's a few businesses trying to solve this. There's a concept of a stable coin, a coin that keeps its value. So let's peg it to the US dollar. So the coin is always worth $1 US, and it'll do this. There's a whole bunch of different ways of doing it, and it's very, very difficult. We don't even know if it's possible, but if somebody figures out how to make a coin that inflates supply or destroys its supply at such a pace to actually keep it perfectly pegged at $1, the question that I have to ask is what happens to the 95% of the coins that exist. If they get their value from transactional fees across their network, why would you use that and not a stable coin? So I think it's to me, getting a stable coin is probably a black swan event on the crypto ecosystem, which I would be really interested to see if they can do that.
So the last thing I want to talk about is, you make me really nervous, Paul, when you talk about, what is it, BitConnect? Is that the company that you mentioned? And I've heard about some other big scams. Is this stuff secure? Should I be concerned about security? Am I going to get hacked? And I read in the papers about people losing millions of dollars a coin of crypto. If someone gets into their wallet or whatever. How should I feel about that? Anybody, you and John have put money into this, so you guys go ahead.
Yeah, you should take it seriously.
Okay.
You can absolutely lose everything, and I wonder if some of these people who lose money and make a public spectacle of it, I wonder if that's a clever way to avoid tax. But yeah, you should take it seriously. There's several different ways, and that's to do this. The internet is of abound. It gets complicated, but if you're holding coins on an exchange and you don't have two-factor authentication, you're crazy. And if you're holding coins for a long period of time, you should have that offline.
Wait, say that again. If you're holding coins on an exchange, you're crazy? Is that what you said?
Sorry, if you're holding coins on an exchange and you haven't enabled a security called two-factor authentication,
Okay.
then you're crazy because you can get hacked.
But you feel pretty good about that if you got two-factor.
I wouldn't feel very good about it. It's a question of minimizing risks.
Yeah.
The safest place is printing out your wallet and putting it into a safe and in a different country that doesn't get earthquakes or fires or can't get hit by a meteorite. I mean, yeah, diminishing returns.
Norway.
John, you get the last word. I can see.
I just lost my.
We're talking about security.
So I think, cybersecurity here is very important, and I think when we look at as an investor, that's an area to be paying attention. The two-factor authentication is actually a really big deal, and the other thing I actually have friends who have had people try to really hack them in a big way. Use an authenticator app. Don't even use your cell phone, because one of the new tricks is to actually call the phone company, change your phone number, take control of your phone, and then use two-factor authentication to break in. So be aware that if you have a lot of crypto and people know through some filing or something that you have a lot, you will be a target.
That little tip there is worth the price of admission. I'll tell you, I didn't even think of that. Good point. Okay, I think we're ready to open it up for Q&A. I'm going to give this back to Rob. Go ahead, Rob.
Well, first of all, let's hear it for our panel. So we want to take as many questions as possible. Who's got a question for the panel? Step right up. Go for it.
Hey, thanks very much for the great information. I had a specific question regarding company structures with a successful ICO. Mark, you had mentioned the Cayman Islands, Swiss-based ICO. Is how it would work, would you basically set up an S-Corp or the equivalent of an S-Corp in, say, Switzerland that would therefore own an LLC in the US if you were based in the US? That's kind of foreign to me how that would work in practice.
So I'm sure everybody probably at least is a little bit aware that, last month there was a tax reform, which is basically the largest tax reform in the 30 years. And I would have answered your question one way before tax reform. And tax reform basically took everything that we did up to tax reform, especially for ICOs, and just flipped it on its head. So it's really hard to answer your question, I think, in a space of 30 seconds time. But I guess what I would say would be is, you sort of have two kind of choices. I would say, if you're going to do a domestic ICO, the structure is a lot simpler. And what you're really then trying to do is to kind of try and decide at what's your basic risk tolerance for how you want to characterize what an ICO, what a token is for tax purposes. And then under tax reforms, they put a bunch of different preferential tax regimes domestically because part of the whole Trump administration's objective was to incentivize businesses to remain in the United States. But you're going to pay tax. It's not like you're not going to pay tax. But I would say prior to tax reform, a lot of the strategy and structuring was to try to at least defer tax, so you didn't pay tax. That is pretty much cut off by tax reforms. And so now I think if you're going to do, maybe because of regulatory reasons or whatever, if you're going to do your ICO offshore, the structures are getting a little bit more complicated because the tax rules of when you as a US taxpayer own a foreign structure and earn profits through a foreign structure, they got probably 3 times more complicated by tax reforms.
I see, but if I'm not mistaken, Jennifer had mentioned if you're trying to set up an ICO in the US, you'd be limiting yourself to accredited investors. And again, I don't know enough about international jurisdictions, but am I safe in assuming that in other jurisdictions, they're a little bit more lax? They're a little bit more open?
It depends. Like I said, you can't even do it in China or Korea at this point. Australia is looking very cross-eyed at ICOs. Singapore sort of is. They haven't said anything. I've looked at Luxembourg. I've looked at Ireland. Their regulators there also haven't really said boo. And so I think if you're looking at a country where the regulators haven't really put any sort of boundaries on it, then you're going to have a lot more flexibility in your structure.
Okay, thanks.
Let me help for a second here. So there's 2 things. There's the tax aspect, and a lot of deals for utility tokens went offshore to avoid US tax. That's a strategy that may not work anymore. Certainly is not going to be as efficient. There's now this, excess intangible income tax or whatever it is on foreign earnings. So the tax benefit's gone, but then there's the thing you were talking about, the regulatory issues. And a lot of these deals went offshore to avoid US regulation, both securities, commodity, currency, all of that. And the difficulty there is a lot of countries have their own regulatory regimes, but there are places where we are doing these. Jennifer can talk more about it, but we do a lot through Cayman, but they have a pretty strict anti-money laundering law, and so there's challenges there too. You want to add to that, anybody? I shouldn't be, I'm the moderator, I'm not supposed to be saying anything important here. Do you guys want to add to that at all?
If you're looking to start an ICO, the first thing you want to do is figure out where your investors are going to be, what type of capital you're trying to raise, how much, and what your end goal is. So just jumping in at a stage being like, okay, where's my structure? It actually starts from your white paper. Like Roger had mentioned, we see at least one of these a day, and I've read more than I wish I did, and majority of them are bad. And by that, I mean they have an idea, and it's wonderful to have an idea, but if you do not have an A to Z structure on how you intend to move forward, and even the product you want to offer, or if it's not a product or service, you are not going to get traction. So before you jump in at a different stage, I recommend to every single person that asks about these ICOs is start with your idea and flush it out as much as possible, because half of them, in my experience, if there is no actual use for the underlying blockchain technology to circumvent hurdles that normal traditional, contracts or transactions have to deal with, then there is likely no use for the blockchain or your ICO. If you can get the same result with what is traditionally seen in the market, then you are basically just going through a securities offering to get money to start your company. So why don't you just do that route instead of adding the additional complex layers of getting the token, issuing that, dealing with the unregulated area. So that's just my general take
So
on
I'll forget my hot dog ICO.
Oh.
I'll
Well,
forget
you never know.
Scratch that. No. Okay, thanks very much. Appreciate it.
All right, next question.
Hi, so I have a question in terms of cryptocurrency wallets and cryptocurrency exchanges. How mutually inclusive or exclusive are they, and how critical are they to an ICO?
What's a wallet? What's an exchange? Do you need those
Sorry,
to do an
before you go, can you just expand on the last bit of that question? I didn't really understand.
So in terms of if you have a token or a coin, how critical is it for your token or coin to be on one wallet compared to another, or embedded in one exchange compared to another?
Yeah, so I think just in terms of using wallet, essentially, if an exchange supports your coin, then you're able to store the coin. So not all wallets are going to be able, one wallet will be able to store one type of coin. So your exchange needs to be able to support your coin. Then it's a question of, does an exchange support your coin? If it does, it also means that there's typically a trading pair. In other words, you can buy your coin with Bitcoin and some other cryptocurrencies. I think perhaps the meat of the question, or maybe what is what you're driving at, is there is, in my mind, a direct correlation between the exchange your coin is on and the value that that coin can realize. If your coin's on Coinbase, it's going to do well, has been the gist. If your coin is sitting on one of these countless exchanges that we haven't heard of, it's not going to do so well. This is a result of liquidity. So what you're trying to do is you want to get your coin listed on one of the big exchanges. Coinbase is obviously very hard for a variety of reasons. Binance is a big one. There's KuCoin. There's a few exchanges that are up and coming. But essentially what you would want to do is find an exchange that does a lot of volume and see if you can get onto that exchange. I would suggest, if you're wanting to research that, a good site is coinmarketcap.com. That has a list of exchanges along with the volume that they do. Does that answer your question?
Yeah, that does answer the question.
Hi, my name is Greg. I have a question for Roger and Jennifer. I'm actually a securities lawyer, and I represent a couple of blockchain and crypto companies. The blockchain client, did a proper utility token ICO, but now their tokens are traded on an exchange, and people have, the price has gone down, so they're concerned about the pricing, so they're putting out press releases, which I'm viewing as like public company press releases, and trying to, sort of tamp down too much pumping of the company. But it sounds like, one thing that the SEC is going to be looking at is whether or not you're focused on how people can make money from the tokens, even if it's arguably a utility token, that relates to the SAFs, et cetera. But, what do you guys think about, how does a company that has gone public or has done an ICO, how do they communicate with the users in a way that isn't going to be seen by the SEC later as pumping of their stock, and therefore making the original utility token of security? And maybe for the other panelists, what advice would you give companies that you're working with about how to deal with the holders of their utility tokens once they've sold them? Do you view them as investors? How does that work, and what's the safest path?
Let me start off. You're a securities lawyer, so you know that old saying that in securities law they say seller beware, right? and that's what we got here, seller beware, because there's a perfect example, something that happened that was really outside of the control of your company that may, that could potentially create problems. And you might be sitting here right now saying, well, I don't believe that we would ever have that kind of claim. And I can't tell you how many times I've said that until I read it in a complaint. And be surprised what arguments lawyers will come up with to turn your utility token into a security so that they can bring rescission suits, et cetera. And we've been seeing those suits, and I've been seeing where the tension is. And you're right, one of the things is it tradable? The other place where people get in trouble on this, by the way, the very first step is to really test that assumption really, really hard as to whether it truly is a utility or a security right at the beginning. And a number of law firms, including ours, have taken a very conservative approach. And you might call it a protective securities compliance approach to even utility tokens, just in case. So that's step one. Just treat it as if it's going to be a security down the road, and do all the compliance and make all the disclosures and file the forms, et cetera. So that's the biggest thing, is to take a very conservative approach on that, because you just have to anticipate some potential problems down the road. The other thing is the ones I'll do, unless they're Reg D, the last question, so Reg D it's a private offering, right? You're only going to sell a limited number to rich people, basically. That's the exemption. I'll do a Reg D offering in the United States. I don't want to do any other kind of offering here. I want that to be done in some other country under some other more friendly jurisdiction's laws. So that's kind of the approach we've been taking to be safe on these things. And I think that's what most companies are doing. They go offshore, but then they truly have to be offshore and not target U.S. individuals. Jennifer can tell you how we make sure that happens. But kind of the environment now in the U.S. is that you try to stay out of, other than Reg D, you try to stay out of U.S. securities law jurisdiction. What'd you say, Jennifer?
Yes, and going to your actual question on how a client could potentially mitigate the SEC later on once these classified as utility tokens are kind of, out there and being traded on exchanges, and the company is trying to mitigate the decrease in whatever valuation that they were purchased at, either by doing press releases. Generally what we do, or our approach is that conservative and parsing down the language in the white paper or whatever they've put out there. So the Munchie decision with the SEC, they focused on the fact that that company detailed that, it's an ecosystem. Although it is a utility, it is a collective effort for the price to increase. If you have that language, it might not pass the Howey test. So if you don't have that language in the white paper, it's strictly utility. You just have to make sure that once it is in that market A, your white paper, whatever purchase agreement you have for the token, has every possible caveat there is to try and mitigate potential issues for the entity moving forward, but also that in their efforts, if it is a utility, it may not be in the company's best effort to try to mitigate the actual price, right? Because the individuals who purchased it knew the risk. But if you are, in essence, and the company is going to move forward and take actions to increase the value of that token, the token holder's hands, the SEC may come back and say, you are trying to increase the return on these tokens. So although it's classified as utility, the company is acting in a way to increase the value, likely a security. So if you are moving forward your white paper explicitly not saying that it is any sort of security, not increasing value, guaranteeing a return, or even guaranteeing that it's tradable on a secondary market after being purchased, our recommendation would be to have the company stick to that. And again, if you have the proper documents, every purchaser of your token understands that there is a risk. But again, if it is actually a utility token, there is a consumptive use, either in exchange for services or goods. So technically, unless they're going to get an increased yield for that product or services based on the use on a particular platform or most, then it's not a utility token.
Okay.
Thanks. This has been very interesting. I wonder if any of you have looked at Holochain, which is attempting to address some technology issues with blockchain, the large carbon footprint and energy cost of blockchain with a distributed ledger. Has anybody taken interest in that?
I haven't come across it.
Okay, well, they're in an early stage. They're running an Indiegogo campaign right now, and it's going exponential. So they're mostly working in Europe, but love to hear what you all would think about it. Yeah.
Thank you.
Hello. I'm the founder of the Cryptocurrencies, and I have a couple of questions for you guys. So first of all, for John. So my question for you is that is traditional venture capitals dying? And for John. So this question, the reason I ask a question is because some of my friends, and they're in this cryptocurrency investor only. There are a lot from the venture capital, traditional venture capital field. So basically why I ask that question is, let's say traditional venture capital is a game for the people who are rich. Like you have lots of money and you have to spread out and invest. But in turn, in the blockchain crypto area, and the pre-ICO is actually the enemy of the traditional venture capital. Just think about we build the product in this area. It's more like a community driven. We launch a product and we reach out the blockchain and the community and we expose, right? And everybody will sponsor us by buying our initial coin our virtual coins. So we get funds like crowdfunding. So that's how the way venture capital play, right? Venture capital from the early stage and just put money in, a big chunk of money for pre-ICO. We get funds from everybody. So the question for you is that venture capital is dying a lot?
So I think we talked about this a little bit on the panel. I think you could say that ICOs are essentially crowdfunding on steroids, probably multiplied by another factor on top of that. But it is true that people can go and they can go raise money that way, and they can bypass traditional venture capital. So, but I would tell you that as a VC, for every 100 companies I see, I probably fund one. And so if 10 more can get funded through ICOs, I'm a fan of that. I hope that they can. I'd like to see more success in this. I'd like to see different types of companies succeed. So I don't think venture capital is going to die as an asset class or even in some of the structures. I think the structures will evolve, but I think venture capital will have a role. I think that different types of companies may be able to be funded through ICOs than a typical venture profile, which I would welcome, and I think that would be a huge area for us to work on in terms of where things go. But I think you should be careful of thinking that this is a community that everyone is trying to contribute to the well-being of the companies that are raising. I think if you look at the behavior of the way people are buying and selling cryptocurrencies, everybody's trying to make a profit. And so it's going to be up to the quality of the companies to see what happens there in terms of how bypassing institutional investors or professional investors works in terms of getting return and not losing money for people.
So what's your suggestion for the trade-off? So at what point you're saying we bring the traditional venture capital in, and later on we do those the community fundraising?
I guess if I put a crystal ball here and you said, and I have to give you a projection, I would say that probably, and I think we're seeing this a little bit already with VCs, is that you'll see venture capitalists will end up putting in early money and try to help build the company to a certain point. ICOs, to me, are probably most effective long-term at the scaling stage once there's enough data for people to truly analyze that company. So that to me is where it's going to be interesting, and I think when you start looking at these massive rounds, hundreds of millions of dollars for growth capital, that could easily go to an ICO, and there's numbers there, there's revenue, there's all kinds of things that people can use to value these companies and to understand whether that makes sense. So it's a little bit more like a traditional IPO, but probably at a much earlier stage, and replaces what used to be the IPO in some places. As
a non-VC, I'm going to agree with that because it's not I don't have a vested interest. I think one is making the assumption that the only value a VC has made in the past is capital. One is making another assumption that the main sort of value that an ICO offers is capital. I think that's a short-term outlook. I think what you'll probably find, I think VC and ICO is actually, it's not mutually exclusive. It could be mutually inclusive. VCs could be seen as a form of social proofing. So maybe I decide to only invest in an ICO that a VC that I respect has already invested in. And so we could get to a point where VCs are used as social proofing, amongst other things. And I think the under-applauded benefit of an ICO isn't the capital. I mean, it's easy to talk about the fact that it's cheap capital now. I think the real and sustainable benefit of an ICO is the fact that you bootstrap a community. You go from 0 users to N users overnight who have a vested interest in you succeeding. How do you put a value on that? It's very difficult, and that's, I think, why we're seeing exuberant prices. So social proofing plus a bootstrap community, I think it's a mutually inclusive world.
Okay, thank you.
Hello again. A question for you, Mark. You had mentioned earlier, about if an ICO will be treated as property, would tax benefits that are traditionally associated with property, like depreciation or even like real estate 1031 exchanges, do you see that entering the conversation? or at least
So, yeah,
depreciation as an example.
Right, so maybe two quick kind of just nuances, right? I would not say that a token will be treated as property. I think what I and Jennifer said is there's guidance in respect to cryptocurrencies, which doesn't, which says that Bitcoin will be treated as property in the IRS's viewpoint. But because there is not arguably a readily tradable market for tokens, that guidance probably, it's saying it will fall under that guidance is too strong. But I also said that because there's nothing else out there, I think that there is that the prevailing view is that it could be treated as property. So that's just, but to your other question, right? So with the tax reforms that just passed, they actually limited 1031 exchanges to pure real estate. So whereas before you could do 1031 exchanges for basically what was considered property, that is no longer possible after tax reform.
Thanks for clarifying that. Appreciate it.
Hi, I think this question is for Paul. I recently asked a friend of mine, what's a good recent book on blockchain? He's a sophisticated professional investor, a VC, and he gave me The Blockchain Revolution, which is this Tapscott, or this Canadian author. And to my surprise, the book is mostly speculation and hope and wouldn't it be great and future maybes, light on facts, light on technology, light on historical or scientific reference points. Is there anything good in print that is professionally done on blockchain that uses facts, references, and actual use cases and forgets all this future speculative marketing stuff?
Not to my knowledge. Simply put, there isn't, I mean, I think we're still very new in this interesting ride.
Right.
I think that if you are looking for a resource, and I'm trying to rack my brain now, there was a great podcast in 3 parts that was done. I think it was, it's an investment podcast. I can't recall investing in, I can't recall it, but it was a 3-part series. And he really, in 3 parts, he broke apart the tech, he understood the tech, then the current value, and then perhaps where we're going to go there. I think that's a very good introduction to the space. I do think Naval Ravikant and Ari Paul are 2 thought leaders who I have a world of respect for. They're on Twitter.
What was those names again?
It was Naval Ravikant. I think one of the founders of AngelList. He's got a fund called Metastable, and Ari Paul has got a fund called Block Tower Capital. I'm not pushing their funds. I'm just very impressed with the way they think about where we're going. They've given it a lot of thought. So perhaps Google investing, blockchain, Ari Paul. You'll find the podcast, hopefully.
Okay, great, thanks.
Sure.
Well, we got 5 minutes. Anyone else have a question? Here's your chance. Well, maybe you guys have some closing profound comments you want to make in the next 5 minutes. Maybe. Go ahead.
5 minutes, profound comments. Anybody have a profound comment? Closing comments. What last takeaway for our audience in our 5 minutes? Start with you, Mark.
He's thinking. Okay.
I mean, I think I would just, as I say, echo the comments that we've said so far is, and I take Jennifer's comment to heart. If you're thinking about structuring or you're thinking about, kind of doing an ICO, there are many intricate moving parts, right? Tax and regulatory, and if you get it wrong, the answer, you're not going to like the answer because essentially, it's an area where, if you have a dollar of value and that dollar gets taxed at 150% because you haven't set it up right and you've got multiple jurisdictions if you're doing an offshore ICO that want to tax that dollar, that's a situation where you're going to have, you're going to be unhappy in the end. So takeaway number 1 is don't go into it lightly. And I think takeaway 2, as I said, I think the rules will change. I think the IRS's viewpoint will change, right? So, I think if you come away from this having a bit of appreciation of kind of where we are, what the current thinking is, just understand that, this is a very dynamic space. And so, we're all going to be along for the ride.
I'm kind of surprised nobody asked the question, when Lambo? Everyone's looking for some money. I think if you're a startup or looking to create a startup, I would just, if you're developing a technology that can be replaced by a database, you're not doing anything particularly blockchain enabled, and you're probably just taking advantage of the craze. I mean, good for you. I don't know how sustainable that is. If you've got an existing product or company that you're wanting to look at an ICO, that could be, if there's a genuine reason to do that, that could be done. I would say just sort of general guidelines to think about it is that, to me, the blockchain, as a simple catch-all rule, there are plenty of exceptions, a blockchain lends itself to a platform. If you're able to create a platform of something, a blockchain is pretty good, because what you're able to do is not just decentralize it, but you're actually able to have people become active participants, contribute to the network, incentivize them. There is a lot of good reasons why a platform should run on top of a blockchain. There aren't many good reasons for an app to run on top of a blockchain. Uber on the blockchain, I don't know what problem you're solving. Airbnb on the blockchain, I don't know what problem you're solving. So I think bear that in mind. Just because it says blockchain, I think fewer and fewer investors are just giving you money for the sake of that. So that's something to bear in mind. Also, with regards to that podcast, you just come see me afterwards. I'll have it for you. Okay.
For those individuals who are looking to launch their own ICO, take time. I know everyone is jumping into the market. Do not. Cart before the horse is what we see a lot. Do not do that. Like I said, parse out your business model, figure out where you want to be, who your investors are, who your target purchasers are, and then go see an attorney. Do not try to do this on your own. And for example, if you want to do offshore offerings, just because you're not in the US doesn't mean you're not subject to other foreign jurisdictions' securities rules and other regulatory rules. And just because you get past the SEC hurdle doesn't mean that you are in the clear. If you are transferring funds on your platform, you could potentially have to register as money service business with FinCEN. If you have a different nuanced modification to your ICO, which is viewed as gambling, you have to abide by gambling regulations. There are a lot more hurdles down the road. Just because you bypass one doesn't mean you're in the clear, and that's where attorneys come into play. And again, mitigating costs, you will have to pay money, but again, if you do your work in the beginning, you will mitigate a lot of later fees. And the other note I have is for individuals who are looking to invest in these ICOs, if it sounds too good to be true, it probably is. Yes, I am obviously from the attorney's perspective trying to mitigate risks for issuers and also investors. Here is an investor who takes risks. We are here to prevent issues on that side. But read the white paper, actually see what they say, see what returns, what their investments are, what they're offering, and see if it's worthwhile. And again, going back to the point, if there is an actual use of the blockchain technology, then it would likely take off. And I know he's scowling at me, so I'll just stop.
I was actually going to echo that same point, that for anybody who's interested in investing in these ICOs, take the time to do the research to figure out what it is, if the product actually exists, what the prospects are. Not everything goes up and to the right, or maybe it does, but it doesn't always last. So it's worth taking the time and discerning, because some of them can actually be very good and interesting businesses. Some of them will be complete wipeouts and lose everything. And like Paul said, the odds are about 1 in 10 that you're going to pick one of the good ones, or one that survives. So it's not like picking stocks.
Okay, thanks very much. Before I hand this back to Rob, I just want to make one announcement. Go see Alan. We have a program on Fridays called Ask a Tech Lawyer in our offices. You can, they say that talk is cheap until you talk to a lawyer, but here's a chance for you to talk to a lawyer for free on technology law questions. Alan can tell you about that. And with that, I'm turning it back to you, Rob.
All right, well, let's give it up for our panel. Let's hear it for our moderator, Roger Royce. Let's thank the College of San Mateo and all our sponsors. I'll recognize our event team and our video team. And let's hear it for the audience for sticking around. Let's hear it for me. Well, anyway, that's it. You guys can stick around, hang out, talk to the panel, take some pizza home. We have Ziploc bags. Thanks for coming. We'll see you next time.